Welcome to 22107 Accounting for Business Decision A. My name is Febriana Stella. We will discuss about journal entries. What is journal entries? Journal entries is a chronological record of transaction. While transaction is an agreement between buyer and seller to exchange goods, services, or financial instruments. Transaction could be by cash or credit card. There is double entry rule in accounting. It is where one transaction occurs, it will affect two or more accounts. There are three steps to record a journal. First, what account that affected. Second, what debit and credit that require. And last, we can record the entry. When we make the entry, the sum of debit and credit should be equal. If the amount in the debit are 100, so does in credit. Accounting rules. Asset and expense increase recorded in debit. In contrast, if the asset and expense decrease, it will record it in credit. On the other hand, liability, equity, and revenue increase recorded in credit, while liability, equity, and revenue decrease recorded in debit. It works the other way around. Accounting equation works as follows. Asset equal liability plus equity plus revenue minus expense. We can move the expense to the other side, so the minus sign could change into positive sign. There will be asset plus expense equal liability plus equity plus revenue. Dividend. It is follow the rule of asset and expense. If dividend increase, it will record it in debit. But if it is decreased, it's recorded in credit. So, we are going to the following example. On 1st of January, Circle Film purchased one camera worth $1,000 and paid with cash. First, is it occur in equipment and cash account? So, the equipment must increase by $1,000 because equipment is part of asset. If the equipment increase, we will debit it. Because we pay the camera by cash, cash is decreased and cash also include in asset. The rule said that if asset decrease, we will credit it. So we credit by $1,000. The journal entry should look like this. It has the date that's set by chronologically and there is account name also debit and credit. So here we put 1st of January and the account name will be equipment on debit side by $1,000 and cash account that is on credit side by $1,000. The sum of debit and credit equal as $1,000. In this state, we prove that one transaction made will affect two or more accounts. In summary, there are three steps to write a journal entries. First, what account that affected. Second, what debit and credit that are required. And finally, we record the transaction. Thank you for watching.